Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that one should be focusing on for the day as well as for the next few sessions. Now, post gap down opening yesterday, we saw slight recovery in Nifty, but that too got sold into in the second half, and finally Nifty ended the day 0.5% lower, closer to 19,525 levels. However, mid cap and the small cap indices outperformed the broader markets yesterday and closed in green. Now, yesterday Nifty did not correct in the same magnitude as its Asian peers, and selected pockets saw some good buying from lower levels, and this was mainly due to the good GST collection numbers as well as the softness in crude prices from $94 a barrel to $90 a barrel, which was visible early morning. Now, what we feel is that apart from both these positive factors, the most crucial factor that one should be eyeing for is the dollar index now, which has started to sustain above 107 levels and at multi-month breakout zone. Even US 10-year treasury yields now they are trading above 4.79 levels, which is the highest seen level since 2007. So both these factors are leading to the upside getting capped as far as the broader equity markets, including Nifty, is concerned. And also one more thing we should be watching out keenly is whether that crude price fall yesterday was just a one-day affair or it's a beginning of a reversal. So next few days would be very crucial for the global markets as well as from the macroeconomic data standpoint. Now, a correct approach to such markets which are surrounded by too many data points would be to mark important resistances on charts, and only if these resistances cross, one should go aggressively long in stock specific opportunities. And also, the stocks that we choose need to be outperforming their own sectorial index as well as the Nifty and Bank Nifty. We cannot do any random bottom fishing here at these current levels, assuming any level to act as a bottom or thinking how more can it fall. So just be a bit choosy with respect to stock specific opportunities. Just pick up outperformers and do not try to bottom fish. Now coming to index levels, last few days we have seen the trend in the index definitely getting weakened, and more so with the selling pressure visible in the global markets. So going forward, the crucial resistance for the day would be 19600, 19620. Only a move beyond this level could trigger a short covering move up to 19680 and 19700 on the upside, where the 20-day exponential moving average is placed. Support on the downside would be visible around 19400, 19430 levels, and in case this level is breached anytime during the day, a further acceleration of the down move up to 19300, 19320 could be witnessed. Significant put writing is visible in 19500 as well as 19400 strikes, while on the calls front 19600 and 19700 strike price hold a significant share of the open interest built up. So overall range for the day could be 19400 on the downside and 19650 on the upside, with a sideways to negative bias. Now coming to Bank Nifty, key support for the banking index lies around 44,100, 44,150, and last 3-4 days we have seen this level being held from the banking index standpoint. And any move below 44,100 could attract selling pressure up to 43,900, 43,850. So the all important support level would be 44,100, which needs to be watched out for. Key hurdle now would be around 44,700, 44,750 levels, where the 20-day exponential moving average is placed, and only a crossover above 44,750 index could witness short covering up to 45,100, 45,150 levels. So the all important supports and resistances for the day could be the first support could be 44,100 on the downside, followed by 43,850. The resistance could be around 44,750 followed by 45,100. Significant open interest built up is being visible in 44,300 puts as well as 44,500 and 44,700 calls. Now this also is implying a trading range of 44,100 on the downside and 44,700, 44,750 on the upside. One important point which I wanted to share with all of you is that we've seen in the last few days Bank Nifty not performing, That is mainly due to HDFC Bank and Kotak Bank. If we try to keep HDFC Bank and Kotak Bank out of the calculations and create a separate equal weighted index which includes Axis, ICICI Bank, PSU banks, Federal Bank and AU Small Finance Bank, then that particular index is in positive momentum and the picture is entirely different. Now see what stocks and sectors are looking positive for the day as well as for the next few days. Now, yesterday we saw within the banking space, HDFC Bank and Kotak were not performing, but stocks such as Axis Bank, Federal Bank were seen outperforming, and we expect the outperformance to continue here today as well. PSU Bank Index witnessed a fresh up move yesterday with most of the stocks continuing its positive momentum. And here, top picks would be PNB, Bank of Baroda, Canara Bank, Bank of India. So, all these four PSU banks along with Bank of Maharashtra, all of them were in excellent momentum and we expect momentum here to continue. And even the financial names such as LIC Housing Finance, Chola Finance, Bajaj Finance and L&T Finance all witnessed a good follow-up move at higher levels. Auto stocks saw some kind of beating in yesterday's session, and I feel one should avoid the auto counters for a day or two before bottom fishing in the same. Now, if we observe the FII data, FIIs have been net sellers in cash to the tune of 2034 crores, while DIIs have supported the markets being buyers to the tune of 1361 crores. Interestingly, FII's long short ratio for index futures has dipped to 24%, which is extremely negative. Now, looking at the internals, FIIs have sold index futures to the tune of 20,588 contracts. They've sold stock futures to the tune of 26,726 contracts. On the options front, FIIs have bought 2,41,800 contracts of call options, and they've even bought 3,44,862 contracts of put options, index put options. So tracking this data, it seems negative, more of a scenario where FIIs are aggressively creating short positions at higher levels, as well as they are expecting a bigger volatility since they've bought both calls and puts. So we expect that we feel that the FIIs are expecting a bigger volatility in the days to come. So just to summarize, key support level for Nifty would be around 19,400, 19,430, followed by 19,300 on the downside. Resistance would be around 19,600, 620 on the upside, followed by 19,700. For the bank Nifty, 44,100 would act as the first support, followed by 43,850, and the resistance would be around 44,700, 750 on the upside, followed by 45,000 and 45,100 on the upside. So friends, that's all for today. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.